it actually started from me screaming and yelling at the British government about how inefficient their grants were. And also just being really cheesed off on behalf of every business owner that they are all working so hard, creating jobs, generating revenue, generating taxes, and they're just being so underserved. And this is globally. This is not a UK problem. It's not an Irish problem. It's a global problem. So why shouldn't we get cash into their hands quicker? Why should it be so difficult?
Andrea, welcome to the pod.
Thanks for having me, Gary. It's great to be here.
I'm delighted to chat to you. What do you do?
Well, I founded a business called Swoop, which is a fintech. And we're a platform where businesses can get access to cash quickly through using their data.
So everyone listening is
going, huh?
Suddenly logging on. Did she say access to money?
Access to cash. Exactly.
What kind of businesses?
Every business. So Swoop, the idea and then the name is derived from you essentially integrate your data into our platform, and in one fell swoop, we will show you every form of funding that you're eligible for. And then if you want to apply for it, we basically automate the entire application process and get you to successful funding. And that's across everything from lending to grants to equity investment. The second part of it is that then we're analyzing your bank spending, your accounts, and we're seeing where you're over spending on essential services like energy, banking, foreign exchange, and then we're surfacing back to you savings you can get. The idea being, if you take out a loan, we want to help you be able to repay that loan. And small and medium businesses are the most overcharged customer segment in the world, and that's a global issue.
Really?
And the reason is because we're all too busy running our businesses to start totting up what would my energy bill be somewhere else. So our platform does that for you, finds the savings for you, and then that can go towards repaying your loan.
Okay. That's quite a simple, straightforward solution. When you say upload your data, like plug in your data, what do you mean?
So businesses are running on accounting software like Sage, Xero, QuickBooks. Nowadays you can integrate your bank accounts into various apps. I'm sure you do for your own personal life. Well, in business, it's the same. So you essentially just log in and you can choose to log into your accounting software and say, give read-only access to Swoop. Same with your bank account. We're pulling your credit score information from CRO, anything on the business. And essentially just in the old days, you would have to go and apply, fill out application forms, find out you might be rejected, start again. So what we're saying is don't bother doing any of that. Just come on, register, set up your account. And through integrating your data on our platform, we're not just showing you what funding's available now, we'll notify you when other funding is available. We'll notify you when you can get a savings. And so the idea is to help businesses from startup right through to exit, stay with them on the entire life cycle.
Okay. It's not just a one and done. You don't just get a loan and then you forget about them.
And, you know, the reality is I used to do this for a living. I had a corporate finance firm before I started Swoop. And the reality is a business owner will come along and say, oh, I need a loan and I need it yesterday. And then you're trying to get the information out of them to go and get them that funding. But they've another 20 fires to put out. So by the time they get back to you and give you the bank statements and management accounts, 3 months has passed. So you got to start the application again. On our system, everything stays up to date. So you don't have to be asked for the same information again and again and again.
So you plug it in once and then that's done. Where did this idea come from?
It came from, I guess I could start at the beginning, which is my father started a business and grew it to a very, very successful business. And I watched that as a child and saw the impact, not just on our family, but on the entire community. So I was really inspired. It was pet food business based down in Edgeworthstown in Longford. Became the largest manufacturer of supermarket brand pet food. And so watched that and found entrepreneurship really exciting. But then, of course, did the typical Irish thing of study to be an accountant. And
It's like, do what I say, not what I do.
Yes. My mother she wanted an accountant in the family. And I was the last child and I was her last hope. And I became an accountant.
We're not saying you have to, but it's not a choice.
But it'd be nice, yes. So did that. And then I moved, I was with KPMG. And once I qualified, I moved to the London office and joined the corporate finance arm there. And but I had the bug of I wanted my own business, so I left and set up my own corporate finance firm.
What's corporate finance for anyone not familiar?
Essentially, it's your business, you need help with your finances, you want to go and raise money for your business, you need advice on what your cash flow is looking like in 6 months' time, you want to fund a project, you would hire an advisor to do that role.
Okay.
But they're very expensive. And so I thought, well, the very ones who need this service can never afford a corporate finance advisor. So that was my point number one, my pain point. The second one was I was looking after a lot of businesses out of McLaren. The Formula One team had just set up McLaren Applied Technologies. So they were spinning out new businesses. And I was looking after those businesses to get funding for them. And I would get super frustrated because I was trying to get them grants. I was trying to get them tax credits, equity investment, lending. And I was just piecing together this same information 100 times over. And I thought, this is so ridiculous. And then I also got annoyed at the entire grants landscape in the UK. It's not like here. I know everyone complains, but here we're pretty unified in where to go to get a grant. In the UK, it was completely fragmented. And so being the auditor that I was, I did a freedom of information request to the National Audit Office in the UK to find out how efficient or inefficient was the grants landscape in the UK. And it turns out it was ridiculous. They were spending £1 million per job created through just entire inefficiencies in their grant system. So I did a presentation in Downing Street to David Cameron's business advisor and some of the various cabinet offices and said, look, this is my research. This is what I found. You need to create a digital solution to this.
So you were just frustrated. You were just
I was
doing
just an angry participant trying to apply for these grants. And 70% of businesses had never gone for these grants. So I was just very, passionate about the subject of you're wasting all this money. And they said,
this is your own business. You were working. And what kind of people were you working with? You mentioned like McLaren F1 and stuff.
All very, high innovation, R&D intensive businesses. And that's how I ended up having to look for every form of funding, which is where the idea came from. It was like, why is it so inefficient for a really busy business owner to have to go and figure out, where do I get my grant from? Where do I get my loan from? Where am I getting my investment from? They're trying to run a business.
You're not talking Mickey Mouse business either. Exactly. You're talking about serious world-class businesses.
That's true for every business owner. Like, no one starts a business to go, I think I'll learn everything about finance, and I think I'll learn every term around lending. They don't have the time. They started their business because they had a great idea. They have a great service, a great product. But why do businesses fail? They fail because they run out of cash. And so my whole thinking was, in today's world where data is flowing, where consumer apps are so amazing, why have we forgotten the business owner?
Was that just bureaucracy? Was that just like layers upon layers just built up as things advanced? Was it just more and more layers built without anyone kind of going, wait a second, this doesn't make sense?
It wasn't intentional. It was business owners' data. It used to be just on their desktop. It wasn't in cloud accounting. So you needed the ability to share data in a frictionless way. Because if I said to you, there are two businesses here today, they do exactly the same thing. They have exactly the same energy usage, but one is paying 5 times what the other is. Why is that? You wouldn't know, because their data is siloed. Whereas if we say, well, bring your data together and you start aggregating data and you start seeing trends as to who's overcharging, who's got the right loan for these types of businesses, it's just about flow of information. And so that's where the disadvantage was for businesses. But now that you can integrate and aggregate, they should have the same service as a consumer does.
My headline sponsor in 2026 is Nostra. They have a really unique way of serving Irish companies. Kevin has backed me again in 2026 as he felt we're a fit as Nostra-backed founders and entrepreneurs, just like I do. They take the headache of IT away and deliver all the technology and people. But most of all, they speak to clients in plain English, just like we do on the pod. They deliver from companies from 1,000 all the way down to 20 employees. Nostra's tagline is, take control of your IT, which means they give companies a view of what they have, how it all works, so leaders in the company understand IT. This episode of The Entrepreneur Experiment is brought to you by Azure Communications. If you're building a brand, how it shows up in the real world matters, just like you see on the pod. And that's where Azure Communications come in. Azure specializes in high quality print and packaging solutions that help businesses look professional, credible, and ready to scale. From packaging and point of sale materials to branded print that actually reflects the quality of your product, Azure works closely with businesses of all sizes to get the details right. Whether you're launching something new or upgrading how your brand appears, Azure Communications helps you make a strong impression where it counts. Find out more at azurecom.ie. That's azurecom.ie. Some of you may remember Rory from Rory's Travel Club in episode 421. Rory's Travel Club has over 250,000 customers in Ireland, and yes, I am one of them. If you're interested in offers on 5-star hotels, cruises, family holidays, and much more, then you've got to go check them out. Also, over 250 companies have signed staff up to their amazing travel offers, and it's only €10 per employee for a whole year. So, if you love travel or want to treat your staff to the gift of travel, then head to rorystravelclub.com today or email inquiries@rorystravelclub.com for more info.
What happened after Downing Street? You went in, you presented the research,
they said,
went to really inefficient.
You're absolutely right. We're not going to solve it. You're going to have to go and solve it. And so they went, great idea, one of the best presentations ever, but you need to go and do it. And then I thought, well, I need to put my money where my mouth is and I better go and do it. So any profits, anything I earn from my consulting business, I just put back into the business.
When was this?
I started the idea in 2016. But so what I used to do was go to Google, had all of these events, and I would talk to all the Google developers there. And then I would say, any of you thinking of starting a business? And then I found two guys who wanted to build a game. They wanted to get into gaming. So I did a deal with them where I said, I'll go get you funding for your gaming business. And then you come work for me 2 weeks of every month. So did a barter. And they built me an incredible prototype. And then I entered into an Enterprise Ireland competition with that prototype called the Competitive Start Fund, and got the first 50,000. Met my co-founder, Kieran Burke, who is with me since then. I showed him the prototype. He was just exiting another business.
Why did you come back to Ireland to do it?
I didn't. I came back. It was actually the Overseas Entrepreneurs Competition, it was called. And I'm a huge fan of Enterprise Ireland. I think what they do for business, well, I can tell you, in our experience has been what they do. There's no other development agency in the world that does what they do. And I know that because when Brexit happened, the British government were studying the Enterprise Ireland model to try and copy it. And I brought them over to meet the team. And of course, I knew they'd never never actually get around to doing it. But they'd studied every development agency and they had picked Enterprise Ireland as the one that seemed to have the most success. So, so it was actually, it was Enterprise winning that competition, ended up being the reason I came back and started the headquarters here, and no regrets about that since.
And what was your goal, right? What did you want to build? Because it's a big project, right? There's certain things you're like, oh, we can just start with 50 grand and we'll figure it out. Like, how did you even, you kind of hinted at it there. You brought it down into like manageable chunks. You built an MVP prototype.
Yeah.
They're very creative. I love that. Because people are always like, how do I find a creative technical co-founder? You need to get creative, right?
Yeah.
So you got the prototype. How did you break this down into manageable chunks? So I think that's the bit that people struggle with, especially when it's a big, big idea.
Yeah.
Because that's a huge, what you're proposing there is massive and so many different layers need to be built in, especially when it's money as well. It's all regulation.
Exactly. My thing is you have to try and get revenue in the door as quickly as possible, no matter how you go about doing that, because that solves all ills, right? You have to, so you can go to an investor, right? You're starting out, okay? And you're thinking, I have this idea. How do I get it from in my head to a prototype? You really do have to get creative, right? But you just say to yourself, if I just get my prototype, at least I can show people what's in my head and gauge what people, how they react to that. But my thing was always, I was doing manually what I wanted the technology to do in an automated way. Okay,
so you knew exactly the step-by-step. You just needed to figure out how to make that happen.
So when I started the business, it was tomorrow I'm going to generate revenue and I'm going to do it, and it's going to be super manual, and it'll be a bit of a website and it'll look flashier than it is. But I need to stand in front of Enterprise Ireland, or I need to stand in front of an investor, or I need to stand in front of the mirror and say to myself, the market really wants what I am proposing here. And the best way to figure that out is, do they want it on a manual basis before I go and find money to go invest into the tech side of it? The second part about doing it manually is you learn the nuances of what not to build and what to build. So for me, generating revenue as quickly as possible. Your product doesn't need to be perfect. Your proposition doesn't need to be perfect, but you need to get cash in the door ASAP. And you need to do that to build credibility. And you need to do it because you can take out a very small loan to start. And if you start building up your credit profile at a very young age in a business, that's going to go towards cheaper lending for you in the future. So there's lots of little things like that where I'd say, well, I'll just do this and I'll get the revenue in the door. But I'm not going to sit here and tell you you're not looking at yourself going, oh my God, how am I getting to the next phase? How am I getting to the next phase? You have loads of sleepless nights. It doesn't matter what stage you're at. You know, we're an established business now, but now I'm having sleepless nights about the US, entering the US, being successful in the US. But I think you either are passionate about starting your own business and delivering on it, or you're not. For me, starting the business was it was actually a mission. And I know people use that phrase a lot in tech, but I genuinely did not start this business. I didn't sit down one night and say, I think there is a big macro opportunity here to make money, and I see the play here. It actually started from me screaming and yelling at the British government about how inefficient their grants were, and also just being really cheesed off on behalf of every business owner that they are all working so hard, creating jobs, generating revenue, generating taxes, and they're just being so underserved. And this is globally. This is not a UK problem. It's not an Irish problem. It's a global problem. So why shouldn't we get cash into their hands quicker? Why should it be so difficult?
I think that's incredible advice for people listening, because it's the best advice. It's just start generating revenue, because people, there's two things there. Start generating revenue, number one, but also sometimes people build the solution and then try to find the problem.
Yes.
They're like overbuild this beautiful thing. I was going to do this and that and the other, and they're half a million in, and then suddenly they're like, oh, but we've no customers.
Yes.
Whereas what you did is a beautiful. It's the most logical. It's the most clean. It's also hardest in terms of like you face rejection early. Talk to me about your experimental mindset, because you clearly have a very structured approach to this. So how did you experimentally test this? So talk me through the kind of the MVP, the manual process into the automation.
Yeah. So went from MVP, and we were kind of thrust into our experimentation. So there is something called open banking. Okay. And open banking it's actually a European piece of legislation that was brought out where it was around, you can securely share your bank data with third-party platforms like Swoop, so that they can analyze your data and tell you, actually, you're not getting the best mortgage with your bank. You could actually get a mortgage over here. And there is the ease of transferring your data. And so it was around generating competition within the banking industry. And it was launched in the UK before it actually launched in Europe. And so the UK regulator came out with this mandate to all the 9 major banks in the UK to say, you have to create a grant competition to put out to the market who's got ideas around how they can serve small and medium businesses with this new piece of legislation coming in.
Jackpot.
Honestly, it was, it talk about timing. It was unbelievable.
But you got to be in,
You got
to be in movement.
You do.
To be suddenly going, here we go. You know, it's paddling against the tide or paddling with the tide. Correct. You always got to be paddling first. Yeah. And then suddenly, a little bit of a lift comes.
We couldn't believe it. And so we had a deadline for this competition. We entered and we won. And so we had put forward our proposition in one fell swoop. Take your open banking data. We'll show you your lending. We'll show you where you're being overcharged. And, to the regulator, this was, yes, please, because we know small and medium businesses are being overcharged. So we won the competition. They gave us the funding, and we had to be back in 3 months with in front of the judges again for the ultimate final of this competition.
So it was kind of like a mini boot camp. And you got how much did you get to start with?
We got 200,000 to go off, build our API, build our integrations into this open banking system, take the data, build our prototype, and come back and show it to the judges.
You had 3 months to do that.
We had 3 months to do it.
That's tight. How long were you in business at this stage?
Like a few months. Like really, we had no business being there, but we had our idea, and so won that. We had a development agency in Kharkiv in Ukraine that we were using, and we had no idea what was ahead of us. And anyway, we do this integration, and then we realize all the data coming from the banks is not standardized at all. It's like so AIB will call overdraft interest. Somebody else will call it debit interest. Somebody else calls it something. We're like, oh my God, this is a whole project in itself to categorize this data to be able to deliver the service that we're trying to deliver.
Were the banks happy with this? Were they like, oh, good, open banking's here? Or were they like, this is a nightmare? It was
very compliant. They had to do it. They all had to invest billions in this.
But did they want to?
No, at the time they didn't want to, because it disintermediates their business model.
That's what it would sound like, yeah.
And so if I'm saying, oh, hey, by the way, Gary, you've just integrated your business with us. I can see you're using, I'm just picking on any bank here. Oh, you're using AIB to do all of your payments to your developer in Poland. By the way, that's costing you $7,000 a year. If you'd gone with Revolut, or if you'd gone with TransferMate, etc., it would have cost you $1. That bank has just lost that revenue. So no, they were all forced into it. But then now they partner with platforms like us to offer other things to their customers. So, so back to, we developed our prototype for the open banking competition, realized this was a much bigger project than we had anticipated. but went back and showed them what we had built. And then we won the final aspect of that. As a result, the regulator writes to the CEO of the largest bank in the UK, which is now NatWest, and said, you need to license this technology that this company has built to help you switch these businesses out of your bank because you're too big and you got a bailout from the government, etc. And so within a week of winning that competition, we had the senior leadership team of the biggest bank in the UK sitting in our co-working space, telling us we had to deliver this solution to go live with them 3 months after that. So
the timelines on this are unbelievable.
Honestly, it was the two of us and our development team in Kharkiv. And we just worked all night, every night. And we were 2 days late with delivering that project.
Only 2 days.
Only 2 days. And I actually phoned the regulator myself to tell him why we didn't go live on the night that we said we would. And I think they were a bit surprised that we managed it. So we were under intense pressure to innovate, but execute on that innovation from the beginning of our lives as co-founders.
I'm always curious about this. Is it a bit like, it's like a gas, it expands to fill the area it's in? Is it work like that? Is projects like that in terms of suddenly you had 3 months? Okay, so this has to take 3 months, whereas it probably would have taken a year.
Yes, I think the pressure,
development team would have been, look, a year, give or take, a lot going on, blah, blah, blah.
Yeah, the pressure really makes you perform and innovate faster. I think it's great to have your back up against the wall because you get so creative in those moments and you deliver. And so, yeah, that started, but we had to then live through COVID as well.
So where are we in the timeline here? So we're probably 2019.
Yeah, 2018 was when the competition was. And then 2019, we delivered for this bank in the UK.
Okay, so you're just starting to get momentum.
Yeah.
How do you make money from this?
We license our technology to them. Yeah. So it was 2020 before we actually fully fledged launched our own platform to the market in the format that we had always imagined that we would. And then we obviously had COVID came along, and that was a blessing and a curse at the same time. So the blessing was we had huge surge in customers just finding us directly because the banks weren't answering the phone. They couldn't get through. They didn't know what government funding was available for them. So we had huge surge in customer registrations on our platform. And we built a part of our platform to help businesses get their COVID funding.
Right.
But there was no money in it because it was government funding. It wasn't, the government funding took over the private sector funding at that time. And so, we were in this balance of helping a lot of businesses, having a lot of businesses use our platform. But our business model is based on, we match you to the funding and we get paid a success fee from the provider.
Okay.
When the provider isn't offering success fees, aka the government, you're delivering the solution, but your business model isn't quite working in that moment. Right. But we got through that mainly because we were also licensing our technology to
you had a dual revenue stream.
Yes.
You had a B2B revenue stream over here.
Correct.
And you had a B2C revenue stream over here, where I can log on and go, I need to get access to grants when the big license.
Yes.
It shows you the power of diversification too.
Yeah. I had lived through 2008, and I think it's been the best thing for me as a founder to have lived through, because you're always thinking the what ifs. So, and I would say, well, okay, I'm a woman and I'm an accountant. Am I risk averse? I wouldn't say so. I think starting a business and deciding you're going to run a tech business is not a risk adverse action to take, but I'm always thinking about what's around the corner and how does the business survive what's around the corner.
You're an optimistic realist.
Yes. Yeah. Always thinking about the downside. How are you going to deal with the downside? I just, as a corporate finance advisor, helping small and medium businesses through the financial crash was something stays with you forever. And that's why I was keen on generating revenue first, always making sure cash was in the kitty, and always making sure that if one part of the market falls away immediately, that you've something else that you can quickly pivot to keep the business going while you figure out how you're going to make up the loss that you've just had. So it's just, I think, it just in my brain to never forget that.
Well, it makes a lot of sense, and I think this generation, that'll be COVID. It does surprise me though. Sometimes I'm chatting to people and they're like, "Oh, this is what we're doing." I was like, "Oh, do you have like a plan B, plan C?" And they're like, "No." I was like, "Well, what if another Black Swan event happens?"
Yeah.
God forbid. But you also have to kind of go, "Well, I could."
Yes.
Anything is possible.
Yeah.
I think that's what I've learned from COVID. Like anything is possible.
Yeah.
Because all the stuff that happened during that, you won't be able to go 5K from your house.
Mm-hmm.
That sounds like science fiction, even as I say it out loud now.
Yeah.
But we've lived through this.
Yeah.
I think it's interesting to see how psychology works. Some people are like you, they adopt it and go, okay, that's never going to happen to me again. And some people are like, just not going to think about it.
Yeah. Well, interestingly, I think one positive aspect for tech, especially tech businesses or capital hungry businesses that are based in Ireland or the UK, etc. It used to be Irish companies would have to take the flight out to San Francisco, go convince the West Coast to invest in your business. And we raised money sitting at our kitchen tables during COVID from the West Coast. We did a 5-minute pitch one night through a group in Miami who had found us because there was a few articles written about us from winning that competition. And in that 5 minutes, we got one of the Hollywood actors who has an investment fund on our cap table. We got Arab Bank Ventures on our cap table, and we got a fund from the UK. And that was just 5 minutes blasting out our pitch on a Zoom call. Back pre-COVID, that would never have happened. So there were some benefits.
How'd you raise before that?
We'd done a seed round.
Okay.
Yeah. So
and then how much did you raise during the second round? So you did a seed round of how much?
Like we did the Enterprise Ireland tranche of funding, which was 250,000, and then we matched that with we went with the UK version of EIS, the EIS scheme. Trust me, if you ever want to know how to navigate all the funding landscapes of Europe and the US, I can give you the map around it. So we raised in the UK at the same time as raising under the Enterprise Ireland for our seed round. And then in our Series A, we did 5 million. And we'd raised all of that through COVID.
Okay.
Yeah.
So do you think, was that a one-off? As in, like, do you think people have reverted back to how they used to work before COVID, or do you think that urgency still exists?
I think you do want to go see them now, but you don't have to, and you don't have to go there to create your network now. They've all changed as well. So they're now looking at data sets from Europe as well as the US. And so, yeah, I mean, in the last round we have another US VC on our cap table now. And that was going there, doing the traditional, getting the introduction, going there.
Did you raise again since?
Yeah. And so it was just, we did that around 10 months ago now. And that was really to help us just fund going to the US. And,
okay. How much did you raise in the third round?
So we did 8 million there. So some of it was we'd won another grant.
Of course you had. You're using your own system.
Exactly. And then some of that was capped with more investment as well. So yeah, so we've managed to do really well. We're on track. We are maniacal about hitting profitability. So we're trying to prove that you can go to the US, you can develop a technology platform, and you can be profitable. So that we are on track to do in July of this year, while still growing. So that's kind of one of our milestones we always set ourselves.
How have you developed awareness around this? Because finance is funny. People are kind of scared of it. You know, like what you said there about small businesses, they need it so badly, but they're terrified of it. How have you kind of got awareness of the brand and of the company?
So what they're terrified of is rejection, and they're terrified of feeling stupid.
Okay.
And it's completely normal. They think that everyone else knows what they don't know. And that's actually the point of Swoop, is to show them everything that a bank manager would be looking at, that what a lender, an alternative lender might be looking at, that a grant agency would be looking at, and educating you as to what it is they're looking at and what do they think about that, where you benchmarked versus others. So a lot of what we do is around empowering people to feel better about themselves as business owners. And it doesn't mean you have to go for the finance, but you definitely want to know, could you go for it? And if you could, what's the likelihood of succeeding? So that's where the majority of the why don't people take external finance, it's a lot got to do with that. And then the second part is it's the cost of it. So if there are things that you could be doing to reduce the cost of it, you should know this. And that's what our platform is there to do. So I think it comes back to that point that I said. Every business owner didn't start life through learning how to be an accountant or learning how to look at numbers like a credit underwriter does. They started their business because they're passionate about something. And then as they go, they realize the most fundamental part of their business is cash flow. And they have to learn it as they're going. And then to say, okay, well, now I'm confident enough to go and talk to an external finance provider and know what they're talking about and know what's behind their black box to know whether I'm worthy or not. It's a big ask. So all we're trying to do is say, just demystify the entire thing.
What are the big mistakes? Let's get practical and tangible for people that are listening. They're like, that's me. Yeah, I'm in this bucket. What are the big mistakes people make around raising capital, getting access to it? Like, what are the key things you're like, that's just a terrible idea?
Yeah. Well, if I divide capital into two, one is, let's say you need a loan, right? You just need some working capital, you need a term loan because of something. Going when you should always raise debt when you don't really need it. Right. So you need to be looking 6 months down the track and saying, okay, that's when my pain point's going to hit. Things are looking good right now. That's when you go. You should always be building contingency. The reason is because the first thing that a lender does is look for stress within your bank statements, right? They're looking for, oh, hang on, was there a returned payment there? The amount of cash that's available at the end of every month is getting smaller and smaller as the months go on.
Right. So they're looking for negative patterns.
They're looking for strain. Okay. Yeah. It's called credit tension.
The big mistake there is not raising early enough.
Not going early enough. Yeah. Okay. Is the first thing. And so, and if you should always, one tip I always give is just keep looking at your bank ins and outs on a 6 month trail. And that's what our platform does. It's showing you all your insights. What's happening? Is your cash balance up or down? All the things that a lender is looking at. So that's for lending. You should be thinking ahead. And if you're feeling like things are getting tight, there's different types of loan products out there now. So some are based on, they take it as a cut off your revenue. So it's a flexible finance product. So if you only make £100 or €100 this month, they'll take €10. If you make 200, they take €20. So there's lots of flexibility.
Okay.
Lots of flexibility in funding these days. Like, it's not like you've one product and that's it. There's hundreds of products. In terms of investment, the investment landscape has changed, right? So
this is talking now about equity, right?
Equity,
You're talking about
equity
so we're going to give person a 10% of her business for X.
Yeah.
Okay.
So when interest rates were lower, there was a lot more capital in the markets, right? So there was a lot more funding available, a lot more venture capital funds with cheap capital.
So during COVID, right, was the
deploy.
crazy time.
Yes.
They were throwing out money like snuff at a wake.
Exactly.
So that was kind of a crazy time that you're talking about.
Yeah, and also valuations were super high, etc. In the seed stage, I've just started my business and I'm looking to raise EIS or whatever. Again, because when interest rates go up, the amount of disposable income these high net worths have to put into young seed startups isn't as available as it was back in the heyday. So the landscape has changed, and the fundamental thing is to generate revenues. They want proof points, and the biggest proof point you can give them is, I'm already selling my product or my proposition. People are actually parting with money. It used to be that you'd say, oh, I had 10,000 Facebook users came on. And no. Those days are over. It's how much money are you making now? Who's paying for your product? What are your proof points? And even the bar with which investors are saying, yes, I'll give you your first seed investment has gone up.
Okay.
So it's a tougher landscape, but I think that's better. I do, because I think a lot of people were getting funded in the early days and they hadn't quite thought through their business model.
It was raise it and figure it out later.
It was raise it and I'll figure it out. And the growth at all cost days are gone. I remember Kieran, my co-founder, and I, we went to the US when we were doing our second raise, and we always play the who should lead in a meeting depending on the character that's sitting opposite us. Sometimes they like, the guy with the ambitious charge ahead, probably Kieran, my co-founder, and I'm the solid one, And so we were visiting all these different VCs, and it was like, you sure you're ambitious enough? With your CAC to LTV, like the cost of acquiring the customer with what you're making, your numbers are looking so amazing. Shouldn't you be just raising and spending faster, etc.? We're like, no, we want to have a profitable business, etc. And fast forward anyway, Silicon Valley Bank collapses. Kieran and I literally land on the day that Silicon Valley Bank collapses. We had all these VC meetings set up. They cancelled us. Then we had to wait till the Monday, go and see them all the following week.
So they're all in turmoil.
They're all in turmoil. And suddenly, now we're the same business as we were 6 months ago. Suddenly it was like, oh, you guys are very capital efficient. In other words, we don't burn money as quickly. You guys are very capital efficient. This is great model you have. So
I love that, like Silicon Valley and VCs in general discovered profitability in 2023.
Yeah.
Suddenly it was like this thing, like, it's all about profitability. Well, shouldn't it always have been?
Well, yeah. So it's interesting. So that was always our path. Our path was, no, we can get to profitability. We don't have to keep burning through cash for this. And now it went from capital efficiency to now they just want you to be profitable. So
so it's gone up a level again.
So we're on trend right now in the US. But for me, I think I wasn't fazed by those conversations because we were very clear about our path. We wanted a business regardless of market conditions. We wanted our business to survive. And I also sit on, have the pleasure and privilege of working with Berkshire Hathaway Insurance. So I sit on their board. And so I got lots of exposure to Warren Buffett and, their thinking on how they build businesses that are technology driven, but always think about profitability. So we've always had that mindset, and that's quite an unusual thing. I don't know how many tech founders you've interviewed, but we've had that from day one, which I'm really glad about. You can sleep better at night if you're on that path.
Talk me through the Berkshire Hathaway thing. How did that come about?
It's amazing. It's actually one of my most favorite things to do. So I happened to be speaking at an event here in Dublin. There was a trade mission from Australia here in Dublin, and I was interviewed on a panel at this event about being a startup, being a fintech. And And somebody came up to me afterwards and said, I'm in insurance. And I said, I used to be in insurance in KPMG. I used to audit insurance companies. Got chatting. He was launching Berkshire Hathaway here in Ireland after Brexit. They had to move a large part of their insurance book out of the UK and into a European market, and they chose Ireland. And so he said, we're doing a startup. And I said, slightly different startup to mine.
Like
but yeah, just got to know them all, went through all the various interviews, and they asked if I would join their board. And I said, I wasn't in the insurance industry for quite some time, but I think what they were looking for was a bit of diversity of thought and somebody bringing, something from a startup mindset, from a tech mindset. And that was in 2019. I've been with them since.
Oh, wow.
And
what do you do when you're on a board? What
What
is,
do you do?
what does, explain this to me, because it sounds so cool. You're like, I'm on a board.
It's funny. Everyone's, the board. Because I see it from two sides. Obviously, I have a board that I'm answerable to. So I think I'm probably a more empathetic board member than others.
Well, you have 360 view, 180 view, whatever you want to call it. Like you can see right around the corner going, I'm over here, but I'm also over here.
Yeah.
So what is it? What do you do on the board with them?
Oh, I mean, well, when you're in a regulated business, there's a lot of things you're doing. You're looking at the risk aspect of the business. So you're challenging the entire risk team on, have we thought about every scenario, especially in insurance? You're thinking about the policyholders. Are you able to meet any policy claim that comes through? Are you able to meet any change in market conditions? So a lot on risk. And
is
then
this
a
like
lot on
a
the
couple of
business.
days a month kind of thing? Or is this like a once a week
like
kind of thing?
a couple of days a quarter. But for our own business, and when we're at our own board meetings, the purpose of a board and having independent people come in is they're not in the weeds of your business every day. They're hearing other things, they're seeing other things. And so most of it is you come with an independent mindset, you're not in the weeds, and you look at everything from that sort of higher up view where you're looking at things, and you challenge. And all you're doing is trying to help the management team be better or make better decisions or help them talk something through. And really that's all it is. It's like you and I sitting here today. We could come up with a thesis or a problem and talk it through, and I will give you a perspective that you might not have thought of, and vice versa. So I think a really good board is you're not sitting there pontificating about things. You're just focusing on one or two things, and you're discussing it and challenging it. And hopefully the management are leaving going, actually, I feel better about this, or actually, I'm going to go check this out.
Yeah, you're not going into the headmaster's office. You're going in, you're getting accountability, and you're getting clarity and maybe a different perspective.
I love board meetings. There's nothing like a good board meeting, but you can have ones that are just, it's 3 hours of your life gone.
I love a good board meeting.
But you do. You can get a lot out of it. The quality of your board matters a lot, especially for a business like us.
Did you put together a board for Swoop?
For Swoop, yeah. When it's at the moment, we started with board observers, and maybe it's a tip for other people. As you go through your VC rounds, whoever is the lead investor in that round will want to take a board position. So they're known as the investor director. And the more you go through these rounds, the more awkward it gets that, you now have to ask somebody to leave the board because the new VC wants to be the ones
X
with
amount
the
of seats to the table.
There's only X amount. So we said to our early stage investors, rather than us having to come at some point and go, do you mind? How about you take board observer positions, and then you can stay with us.
What's the difference? Oh, you can still stay.
You can stay as an observer. I mean, so what's happening there is and it works for a lot of investors too, because they don't want to have 100 directorships on the CRO. They don't want to have the risk of being a director of a business that may not make it.
Okay.
And then on the flip side, we get all these brilliant characters sitting around the table with different life experiences, and they come to our board meetings and they play the same role, and they give us observations, etc. But we haven't had to go through the hiring, the firing, the whatever. As you mature and you go into more VCs, then you do. You appoint them officially onto your board.
We've had this quite a bit on the pod, in that people have raised cash and they've kind of maybe had less than a positive experience.
Yes.
And someone was on a few weeks ago and they said, it's just so important to raise the right type of money.
Oh, yes.
And in the comments, there was a lot of comments underneath that episode going, how do I know what the right money is? So I was going to make it your problem. How do we know what the right money is?
I always say, like, choosing your investor is like choosing your husband or your wife. And that is not a cliche. It is so fundamental. You are getting married to these people. They are in your business, your baby, the thing that you have developed, blood, sweat, and tears. And you're bringing a new energy into that business. And they can be very powerful, right? So they probably have a board position. So the first thing is, in the early days, don't be over-promising, over-giving. I've actually observed in Ireland a culture of an angel investor putting money in and then asking for the board seat. And I've had peers who've given that board seat, which is a very valuable thing to do. And then you can never get rid of them. And then they're being quite obstructive at times as well. That shouldn't be the case. In the early days of your business, it should be you as the founders, good people around you, but not be giving away the boards. But you know in your gut, right? When you go to meet a VC, when you go to meet an angel investor, first of all, do you have a chemistry with them? And the second part is, are they bringing something to the table? Like, are they genuinely bringing something to the table? And by bringing something to the table, I mean, do they have some connections for you? Are they going to be in your business every day of the week? Because some are. Or are they going to let you go and run your business? So
how do you figure this out though, Andrea? Because I think this is the key thing. There's a couple of things at play here. I think it's good to dig into it with someone like you, because it does come up quite a bit. It's kind of like on the first date, right?
Yeah.
Everyone says they're sound. Everyone says, yeah, no, I love sport too.
Yeah.
You know, it's like that. You know, VC is like dating, but how do you know? And you're saying, oh, you're getting married to these people. You don't have 2 to 3 years to date them here.
No,
so
but you have a due diligence period.
Speed this up.
You have a due diligence period. And in the UK and Ireland, in Europe in general, due diligence takes forever. That's the big difference with the US. Our US VCs, when they came in, were like, what's taking so long? This is crazy. Like 6 to 9 months can go by. So somebody has said yes to you, and 6 months later, you still don't have that funding.
So what, you're checking them out or they're checking you out?
No, they're doing their due diligence on your business. So they're saying, oh, I will invest 500,000 or $1 million or whatever it is, subject to, so they give you a term sheet and they say, here's the terms of our investment, subject to due diligence. And then they want to know everything about your business, and you have to show them that. During that phase, you start to really get an understanding of that.
Okay.
Investor.
So it kind of comes out in that stress testing period.
Yes.
Okay.
Now, the problem is that you're sitting there thinking, oh God, this isn't going to work, but I've no choice because I'm too far down the line.
Yeah.
I'm too far down the line. I was expecting that money 3 months ago, 6 months have passed. I'm literally on the edge of my seat here. They're probably renegotiating the terms with you. If they are, that's a huge red flag. You do not want them in your business. So fundamentally what happens is you have to at some point say to yourself, do I really need all this money? Because that's the other thing that people make mistakes on. They think they're supposed to go and raise money. They think they're supposed to go and hire that chief marketing officer. They spend the money in the wrong places. Sometimes you are doing yourself a favor by going, I need to let this fall away and I need to rethink this. Because having that person in your business, like having a virus in your business, and it could be the death of your business. So having the confidence to say, can I stop? What would happen if I stopped?
This is my question, right? Because obviously, you know, it takes so long and then you get it, and you think you get it. Should you be keeping the process in tandem?
Because you need to, you do not have an investor until the cash is in your bank account. So you have to run. I mean, well, like we've had it happen to us where it wasn't that we had a bad investor. It was they were closing their second fund to then put into our business, etc. But the second fund was taking forever to close. But because we had said to ourselves, oh, we know how this goes, we had about 5 or 6 different things going on. And that's where one of the grants came from. We were like, let's assume none of this happens.
Okay.
So you should always assume you don't have an investor.
Okay.
And I'm talking literally until the money comes into the account, because I've had cases where businesses have even signed, no sign of the funds arriving, and you're on a month-to-month situation. So always go into it and say to yourself, assume you're not getting any of this money for at least 9 months. Happy path if it comes quicker, bonus for you, but assume it's 9 months. If they start delaying the process at the very beginning, so they go through too much due diligence, they can't meet you, it takes them 3 more weeks to get back to you. These are all red flag signals, because sometimes, especially in the very, very early days, you have angel investors who will say, oh, I have 100,000, I'll give you that. And then they keep moving the goalposts. And that 100,000 seems really important to you. By the time it gets to the end of it, they're taking a board seat. And by the way, you have to pay them 36,000 euros for the board seat. There's quite a bit of that goes on as well. So
is it naivety that people fall into? Is that like maybe if they're an early stage founder, the kind of naivety, someone says, oh, we're going to give you $1 million. You're like, oh my God, we've made it.
It's not naivety. It's actually the Irish market is small. So the liquidity, so the availability of investors to Irish businesses isn't huge. It's not like the US. But one tip I will give any of your listeners is do what we did, open up the competition. We're an Irish-based business, and we didn't go with EIS in Ireland, we went with the EIS scheme in the UK. We ran dual processes. We went for EIS, and we also went for EIS. And we said, whichever comes in first at the best rates, etc. But you're widening your investor market then, and you can play one off the other. So now you're in the driving seat, and you've opened up your options in terms of what's available to you. And having that base in the UK can bring you other benefits as well as having your base in Ireland. So a lot of Irish people that I meet, they think, oh, I'll get my funding in Ireland and then I'll go to the US. There's a step in the middle that you could be doing. That's a lot easier than having to make the huge leap to the US. And you can do it from startup and raise under the scheme in the UK. So widening your net, opening your pool of investors, playing one off the other, and you drive the process. And if you feel like the other investors beginning to drive the process, that's a really, really bad place to be. And it's probably likely you're not getting your funding, or you're not getting it for a good few months afterwards. So yeah, lots of war stories I could tell you.
But this is what the pod is about. The pod is like about your journey, but it's also about like passing down this information to, like I always say, I want one person listening to get an unlock.
Yes.
So I want one founder kind of going, oh, I know exactly where we are in the funding journey now.
Yes.
Andrea is describing my journey.
Yeah.
I am right here. Oh, I have been to maybe emotional. I've just kind of gone, oh yeah, the vibes are good with Andrea. She seems sound. We'll just wait for her cash. Whereas instead, you need to be stacking up all these look
different
options. Options are power.
And by the way,
anything
one
in
option is being nuclear and saying, I don't get the cash. In your head, build out that plan.
Yeah.
And we are very emotional as founders. And one thing we convince ourselves is, oh, but I can't let that person go. Oh, I can't say no to that contract. Oh, I have to keep going with my Google ads or whatever. Well, no, it's amazing what happens when you say to yourself, no, I actually can't. Yeah. So one way to get through the emotional roller coaster of raising that capital is to do a plan that says, I don't get that capital, so that you just feel more confident and you're calling it out early. Yeah. You're saving yourself a lot of
survival at all costs. Correct. As well. Like when you're a founder, you have built this from up here into your heart, into your hands. You've manifested something real into the world. It's survival at all costs. Yeah. Keeping that alive. Yeah. A lot of business is about survival. Yeah. It's like we talked about earlier off camera. showing up every Thursday. That's in my head. I'm like, new episode every Thursday.
Yeah.
New episode every Thursday.
Yeah.
There's a million other things I have to do. But the number one above all is, did you put out a new episode this week?
Yeah. Exactly.
The answer is yes.
Pretty simple, isn't it?
We've done a good job.
Yeah.
Now, there's a million things. Was it a good one? Was it this? Was it that? Did you edit it? Did you get the social? Did the social perform? A million other things. But none of that happens without, did you put a new episode out every Thursday?
And so the last tip I would say is, if you've told yourself that you have to raise $1 million or $500,000 or $2 million, whatever it is, and if in there you have things like it's to hire a chief technology officer or a chief marketing officer, whatever. No, you don't. You don't need to be hiring them right now. What you need to be hiring is, who do you need to get you to the next milestone? What skills do they need to have? Can you do it fractionally? Can you go and do a barter like I did? Because a lot of the time we raise money, we're kind of conditioned. Oh, I have to raise this money and then I have to go hire these really smart people. And so one of the biggest problems that we as founders have is, because we're all highly insecure as we're starting our businesses, we feel like we don't know everything and I'll hire someone who does. We overspend on hires. We overspend on brand or marketing or whatever it is. Thankfully, we have AI now, so we don't have to do all of those things and we can all become experts in a second. But there's still tendencies to do that.
I hear this all the time. That story repeats over and over. And people that are really honest like yourself come in and go, oh, and the other one I hear all the time is that, we raised a lot of cash and then we hired someone from our biggest competitor, or we went and hired someone from Google, or we hired someone from them because we figured they knew what they're doing. But then it's like asking a dog to climb a tree.
Exactly.
They've only known how to work in that big company. And now you've brought them into a startup, even though it might be well funded.
Yeah.
It's a totally different environment. I have heard that story ad nauseum. Like that is one of the most common mistakes, is that you hire someone who knows what they're doing, but not in that context of the startup.
Well, we have those war wounds too.
I think everyone does, because on paper, that stacks up. I see where you're going with this. I see where the logical train of thought is you're following here.
Yeah.
What? So like that's like a masterclass in raising. I think that's so valuable. I think that will save people quite literally months of their time.
Yeah.
What's the business market like right now? Because you obviously have this like bird's eye view of seeing all these types of businesses, both Ireland, the UK, and now the US. Where are we in the world? Because there's so much noise and not enough signal.
So it's so interesting. I've been at quite a few events recently where this was the question. What's going on? What's the sentiment? We're growing incredibly fast, and we're growing incredibly fast because businesses just have their heads down and are doing business, and they need cash flow to do business. So, we thought, oh my God, we have high interest rates, we've got tariffs, we've been through Brexit, we've been through Russia invading Ukraine. Every single time an event has happened, we're like, oh, this is the moment where it's all going to start dropping off. But what you're finding is businesses are just trading through it. And actually that stacked up. I was at an event where Enterprise Ireland's had its best year. The IDA's had its best year in terms of exports from Ireland, etc. So there's a lot of noise around. There's a lot of negative sentiment. But actually, when we look at our numbers and what's happening, we're not seeing, in our data, we're not seeing businesses going into default or into liquidation. We're not seeing those stress points that I saw in 2008, interestingly enough.
I think we're all a bit scarred from that, actually. I think we all, especially in Ireland, I think a lot of us still have that kind of like, there was the big R word, the big recession, where it still looms large.
Yeah.
And if you did listen to the news, did listen to the media, like they're talking up like you'd swear every day is the end of days.
Yeah.
Whereas when I do talk to founders like you, mostly it's exactly that. They're just trading. Literally, the person who was sitting in that chair 4 hours ago said word for word what you just said.
Yeah.
And it was owned from Bread 41. So a bakery and a big massive fintech.
Yes.
Same thing.
Yeah.
Same philosophy. We're just getting on and getting on.
Yeah.
And it's
There's
just
noise. I actually was saying to someone the other day, I feel like if you're a business that has survived the last 5 years, you are resilient. You've seen it all. And and so therefore I think we'll have better businesses coming through now, because, it used to be, interest rates gone up by, a point, and suddenly there was stress in the market. I think it's just everyone is used to something, geopolitical event going on or some economic event going on, that I think they've just got their heads down. Where we saw the real, we needed to re-educate the market was, especially in the UK. I think Ireland was much more mature about it, but in the UK, the government was giving out loans. You gave them 5 answers and you got 50,000, and it was 2% loan. And oh well, if you can't pay it back, it distorted the market view as to what a genuine interest rate was. So we had a lot of adjustment of people's mindsets as to what credit is and what a normal interest rate is. That was probably the biggest adjustment we saw. Brexit has had a big effect as well, more in the UK than here. So in the UK, there has been a slowdown in investment, more conservative. People don't grow as businesses aren't growing at the rate they should have been. And 16,000 businesses stopped exporting in the UK. So you can't but notice those types of trends. But there's enough young businesses coming through looking to grow, like that are filling the places of those businesses, that we're not seeing like an impact on our business. Yeah.
How do you manage this personally, right? So I like to talk about the business, the body, the brain. How do you manage this as like Andrea the person, not Andrea the business person? Like how do you like look after yourself?
Big believer in meditation. I start every day with meditation, yoga, infrared sauna,
oh nice,
cold shower, and then I'm good to go.
Pretty nice morning.
And if I don't, I'm not as productive during the day. So that's perfect and sounds wonderful, doesn't it? When I'm back
in
at
your
base,
bubble, yeah.
But when you're traveling a lot, it's harder. So I'm very much nature. I have to go hiking, or I have to be out in a park. I have to be near nature. It really grounds me. And I have to be doing something like yoga, Pilates, just to keep my mind in a good place. And yeah, and meditation. They're kind of, I don't go up or down either way. When things are going well, I'll be like, yeah, it's going well. But there's 20 other things in my brain saying, be careful, don't mind the hype. And then when they're down, I think, okay, my back's against the wall. That's always a fairly creative time. And I think about all the scrapes we've come through. And so, yeah, either way, I don't go high or low, I would say, is probably the best thing I can do for myself. And the meditation does that, I think, for me.
So how do you manage then your time? This is always a key thing. I'm almost interested with people who are like you're traveling a lot, you're managing businesses in multiple different locations. How do you manage your time? Like, how do you think about it? How do you map it out?
I'm not one of these that is very rigid on, you have to do this at this time. I've worked out when I'm most productive. I've worked out like I need a clear head and I need to be in a very quiet space to think and to just write things down. And sometimes I get caught in the weeds. And I think as a CEO, you just shouldn't be caught in the weeds. There's a book called High Output Management that I truly believe in, which is sometimes you have fires going on and you need to go and spend time with that team to help them push through that and work out what is right to get the best output of that team. But then you need to move on. Like, you don't need to stay with that team. You need to move on to the next team. So I like going deep sometimes in the business where I can see there's an issue, because I'm an auditor. I mean, that's how I started life. So I like going deep sometimes, but then I need to get back out. To get back out, I have to be in a very quiet place. So weirdly enough, being on a plane is one of the best times for me. I love that time of no one can get you and you can write and think about, well, where are we going and has the world changed? And
how do you put this together? Like, what's your format? Do you just free write? Do you have a structure?
Yeah, notebooks. I have notebooks and scribbles everywhere. Started to get better. There's just something about digitally putting it down doesn't do it for me as much.
That's why I'm holding it.
Yeah,
I do it. I have Notion. I have the two of them together. I have Notion, and that's like my second brain, and everything kind of lives in there. But this, if you give me the option, you're like, you never use a laptop again, you never use your notebook again. I'd be like, just give me the notebook. There's something about physically writing it. I find when I do a to-do list on digital, I'm like, kind of light, whereas this feels real.
Yeah. I'm the same. I love my notebooks, and I love reading. I'm a voracious reader of what's everyone else doing. I love following companies that are further on down the line than we are. And when I say I love following those companies, I have mapped out what their growth rates were, what their revenue per employee was, what at our stage, are we better than they were? I'm always doing things like that to kind of,
we need to get you some new hobbies.
It's just,
I love a good board meeting.
And I love reading and I love checking out what, you'll find me doing that all the time, but I find it quite inspiring. Like, oh, we're further than they are when they were our age and that type of thing. Yeah.
Again, thanks to our sponsors, Nostra, who take such pride in securing their clients. Kevin talks a lot about immutable backup. It's the difference between recovering from a cyber attack or not. Cybersecurity is made so complicated by so many, and Nostra work to make it easy and flexible so it doesn't stop your business, is affordable and really delivers, because no one wants to get that attack phone call. Now back to the pod.
Okay, so we're going to do a quick fire round, and you've kind of beautifully led us there.
Yeah.
What's the number one book that's had the biggest impact on you?
That's very easy. The Hard Thing About Hard Things.
So it comes up so often.
Does it? Do you know why? It's because it's so real. It is so real. Yeah. That's the book I recommend to anyone who joins Swoop.
You a big reader?
Yes, huge.
What's your poison? Is it all business, or do you have anything else that you like?
No, I can't do all business because wrecks my brain. So I'll always have a good fiction book going, and I'll dip into that, and then I'll always have some kind of business book going. Yeah. So the one that I've picked up recently is The Art of War, which I don't know. Have you ever read that one?
You know, it's so funny. It was recommended. Not the week before last. It came up from Ray Ryan.
So that's interesting. So I was given that book, oh my gosh, in my McLaren days. And it was by one of the engineers there. And he said, if you ever want to figure out strategy, you have to read this book. And I remember reading it at the time going, not really getting this. And then I picked it back up and I'm like, oh my God, it makes sense. So relevant.
The right book at the right time.
Yes.
I always say this because we talk about books a lot in the pod, and people are always DM me going, what book should I read? I'm like, what problem are you trying to solve?
Yes. Yeah.
Because it's totally different. Like you can read it today and go, what a lot of crap.
Yeah.
And then you can read it in a year's time going, oh my God, this is unbelievable. Because the context is there. Out of context, it doesn't really make sense. What's your superpower?
My superpower, I would say, is my empathy. I think I love people. I genuinely am so curious about what anyone's up to, what their business is, what they're doing. And then I can really empathize with that. So when I'm talking to other businesses about how to solve for their business, I am literally treating it like as if it's my business. And it matters to me that we can solve the biggest crisis of their business, which is cash flow crisis. So for me, it's just a huge, privilege to be involved. Someone's letting you into the most personal thing for them, which is their business. When you're an entrepreneur and you start a business, it is honestly the most personal thing to you. So I think just always having that in the back of my head, and I say this to everyone who works at Swoop, do not treat this person like you're at a call center, whatever. This is their entire life on the line. So treat it as if it's your mom, your dad, your sister, your brother, and they're in a state of crisis, or they have such huge ambition that they're trying to grow, and you're there to solve that for them. So for me, I think, just being able to live what's in their minds, my customers' minds every day is I think helpful to the business and the product that we develop as well.
It's a brilliant framing. I really like that. What's the most interesting experiment you've done in either your personal life or the business?
Actually, we're running an experiment right now in the business. So when we started the business, it was we would build it and we would only be the ones that solve this. So businesses would come find us. And we realized we don't always have to be the ones at the end of the phone, at the end of the technology solving for it. We can just give it to others. And it's almost like, oh, we're giving our control away. And so we're creating a new revenue stream in the business, completely different business model using our technology. And it's gone from, could we do this, do you think, into it is now one of our strategic growth levers for this year in the US. And we did that pretty quickly. And that's kind of that idea that we were talking about of, you start your business and you think it's going one direction. Actually, probably the most successful part of the business will be this little experiment that we're now running. That was kind of a byproduct of why we started the thing in the first place. That's been quite surprising to me how quickly we've moved on that. And I would say it's because the backs are up against the wall, because we are all looking at every release that comes out from Anthropic or GPT, and you say to yourself, well, we need to run faster too. So I quite like that though. I think I think it's a good time to be in business and be thinking, well,
there's two different perspectives. It's the worst of time or the best of time. It's going to take everyone's jobs. It's going to create new jobs. That's a whole other topic for a different day.
Yeah.
I'm going to give you €1 million. We're going to invest it in one company or one person, not yourself. Who?
And does it have to be a founder or is it?
It's open.
I came across a company, correct me if I'm wrong, I think it's called Neuritas.
Oh, yeah.
Oh, my gosh. Just listening to that founder 2 weeks ago. And so what the proposition is, I totally get. And so it's all about the food we're eating and the molecules within the food, et cetera. I'm probably explaining this terribly. But I truly believe in that. I think we're having a food revolution. And I think the direction of travel that they're going and the science behind it, they are bang on the money.
The way they're going, they ain't taking our money.
Yeah,
they are flying.
But it's unbelievable. I mean, but you see why. All of us are changing our tastes and our trends and what we care about, what's in our food now. So
again, one of those things we didn't even touch on, GLP-1s. They're going to redefine how people consume food, how they taste it, how to think about it. That's a whole other topic. But
coming from the insurance world, I'm not sure if GLP-1 is going to be something that we discover is good for us. I think
the unintended
that's a train wreck
consequences.
coming down the track at some point.
The adoption rates of that and and AI are kind of going.
Yeah,
we're getting on board very fast here. What's like you said, the unintended consequences. What's the single most important word in your business?
Empathy.
Empathy.
It's still empathy. As I say, I think empathy is going to be one of the most important aspects that you can have to your personality as AI comes into our lives. And so, for me, it's all about put yourself in the shoes of our customer and why have they come to us? They either have a huge ambition and a dream and they can't sleep at night. They're so excited and they need to get the funding for doing it. They need to meet payroll at the end of the month and somebody's not paying them on time, and how are they going to do that? And they've got 20 people with 20 mortgages relying on them. So it's that empathy of putting yourself in the shoes of the person that's engaging with our platform right now.
What's been your favorite travel experience? You travel a lot. So Rory's Travel Club are working with us, and Rory's like, ask all these people these questions because I love to get new tips.
This one's so random, you're going to be like, what?
So more random,
my favorite travel experience was this was during my McLaren days. So we had this product that we had launched through the engineering team at McLaren, and it was a super high end for high net worth individuals, etc. And we had this buyer who used to fly in to McLaren, pick them up and fly them back out again. And they said, oh, we want you to come and meet the family who's buying all of these. They want the distribution rights for Saudi Arabia. So I said, yeah. And so when you get your visa, you have to go into the embassy and you have to fill out all these forms and say who your sponsor is. But it was all in Arabic. So I didn't know who my sponsor was. I just knew they were our buyer for our product. And so the woman in the embassy had to read it out in English to me. And I was spelling Bin Laden. And I realized that my sponsor was the Bin Laden family in Riyadh. And apart from the Bin Laden family is a very successful construction business, and they were the buyer who had invited me over to Riyadh. So I went to Riyadh and obviously wore my abaya, etc., and went to the house for the meeting. And they were like, "We're really impressed that you came because a lot of people don't come." So they were one of the best business partners. They were so straightforward, always paid on time. And then they took me out to a racing track. So I was dressed in head to toe my abaya, and I got to drive a Zonda, a single-seater car around the racetrack in the desert. And that was probably the best business trip I've ever been on. It was so fascinating from
wild.
A business perspective and from a personal experience.
From an experience perspective, and this is a proper experience. Do you have any travel hacks? I know you travel a lot around like the US, UK. Do you have any travel hacks you're like, this is my little secret?
I never check a bag in. It doesn't matter how long I'm gone for.
Really?
Never check a bag in. Like, why? Even if it's winter and let's say I'm like, well, I need to put a coat or something in. No. I'll go to a Mango or a Zara or whatever it is because I've worked out it'll be cheaper to buy the coat, use it there and put it in a charity shop before I leave.
Accountant.
No, but it's like the whole friction of being in an airport is usually around the bag.
And you have an unnatural anxiety towards it as well. You have this impatience of like waiting.
Cannot do it. So
never check a bag. Okay.
Never check a bag. No.
I love that. What's your
I have
best?
some others, but that'd be my most favorite.
I love that. What's your best bit of advice you've ever gotten or given?
Gotten is from my father, and that is to just really, really listen to your gut, and it's true. And for anyone who's thinking about, oh, I'm not feeling too good around that investor that might be investing in my business, your gut is telling you that your gut is right. So for me, going with my gut, and I react that, like I started this business from my gut. I would say a lot of your founders who come in here say the same thing. So that's the most important. The second one is actually from Warren Buffett, which is always think about building a forever business. So you should be making all your decisions on the basis that you will own this business forever, and this business, you want it to be around forever. And that helps you make more rational decisions. You're not burning through cash for the sake of it. You're not hiring and firing because you want these people around you. You want to have a good team, and you're not thinking, oh, I'll build this sort of false growth narrative so I can exit the business, etc. So you just make better, calmer decisions.
I love that. A forever business.
Yeah.
What a beautiful way to end. Andrea, where can people learn more about you and more about Swoop? Swoopfunding.com, and I'm Andrea at swoopfunding.com. If anyone wants to drop me a line, I say this all the time, and then everyone goes, "Oh my gosh, got all these people emailing." But I love it. I need to raise 10 million this year. It's kind of I love it. I love engaging with other entrepreneurs. So yeah, Andrea at swoopfunding.com. And what markets are you active in? So people are listening to this, they're like, "When does this apply?" What markets are you active in? Yeah, Ireland, UK, US, Canada, South Africa, and Australia. Class. Yeah. Andrea, that was an absolute pleasure. Thank you so much. Thanks for having me, Gary.